And it's another trading day right here in Lagos, Nigeria. The markets are buzzing right now. Here's the stories you'll be looking at. Not just foreign exchange reserves climbed to $46.7 billion, marking the highest level in 6 months. And data from startup platform shows that startups in Africa are feeling the squeeze as fundraising timelines stretch, reversing the rapid-fire pace of the 2021-2022 boom. And cocoa prices have plunged more than 12% so far in November, slipping below $6,000 per ton. It's great to have you join us. I'm Ladi Williams, and yes, I did say the markets are buzzing. Let's get a check on what's playing out with the metals market. Now, we're seeing gold prices. They slipped to about $4,039. That's spot gold per ounce, 0.84%. So we're seeing sell-offs right there in the metals market for that short trade. U.S. gold, 0.10%. That's for the futures, $4,032. Spot silver, that's holding on to that $50 level. Platinum, 0.67%, $1,545.90. Palladium, 0.44% down. So it's red across board at this point. And we know for risk assets, they've been getting the sell-offs so far. That's helped the precious metal, go up. But we're seeing sell-offs right now. Does it mean that risk on is back? At this point, that's a question right now. Let's get a check on oil now. We're seeing oil prices. They fell nearly 1% today as the supply concerns ease with the resumption of loadings of a Russian export hub, which was briefly halted by a Ukrainian drone and missile strike there. So we're seeing $64.09 a barrel. That's for Brent, 0.17% down. WTI, that's the U.S. grade, $59.86 a barrel, down about 8 basis points this afternoon. Still tracking what's playing out right there in the oil market. And talking about startups now, they're facing a new reality in fundraising timelines. According to a recent analysis of African venture capital trends there by Big Deal, while the old rule of thumb, raising a new round every 18 to 24 months, that once held true. But data from a funding boom of 2021 to 2022 showed faster cycles at early stages with pre-seed, seed rounds closing in under 16 months. But as the market cools, startups are now seeing, intervals stretch, dramatically. 2 years between pre-seed and seed, and over 2 years between seed and Series A, and more than 3 years to reach Series B funding. Analysts note this isn't just an African phenomenon. Similar delays are being observed globally, underscoring the need for founders to recalibrate expectations as venture markets evolve. And let's look at trade now. Nigeria's trade with other African countries surged by 600 billion naira in the first half of 2025, rising 14% to a total of 4.82 trillion naira. That's according to data from the Nigeria Customs Service. Officials attribute the upswing to strengthened regional ties and growing momentum around intra-African commerce, even as the naira's weakness that complicates the dollar value comparisons. All right, let's look at other exports now. Cocoa prices have plunged more than 12% so far this November, slipping to around $5,401 per ton. The sharp decline comes after a strong rally last year and is being driven by improved weather. That's across key West African producers, chiefly Ivory Coast and Ghana, and signs of record-breaking bean harvest ahead. The drop signals a shift from cocoa markets, supply concerns that boosted prices. That's ease, leaving exporters and chocolate makers navigating a new landscape. I guess that should lead to lower chocolate prices, I guess. All right, let's get a check on what's playing out in East Africa now. See, Kenya's currency story is shifting. The Kenyan shilling has slid to its weakest level versus the U.S. dollar in over 6 months after an extended run of remarkable stability around 129 shillings to the dollar. Analysts point to tighter dollar supply and lingering importer demand as drivers of the move, signaling potential challenges ahead for Kenya's foreign exchange market. All right, now let's head on to our first conversation now. We're talking about hair attachments. They're becoming a big business in Nigeria, with demand rising sharply across all age groups as beauty trends evolve A decade ago, many women relied mainly on their natural hair, but today, we're seeing hair extensions have surged in popularity and so have prices, jumping about 66.7% year on year to about 6,000 naira as of October 2025, according to data from the financial derivatives company. At the same time, Nigeria remains heavily dependent on imported hair from global producers like India, China. Joining us now to unpack this, we have Emefiele Chukwu. She's an analyst with financial derivatives company. Great to have you on the show.
Thank you, Ladi, for having me.
Fantastic. And yeah, I feel, yeah, definitely you have hair on at this point. We're seeing hair attachment prices up by 6-7% in just 1 year. What's driving this? Is it just higher demand, you know, at this point, or naira weakness, or a combination of different things?
Yes, you're very right that prices of hair attachment has risen to 6,000 naira from 3,600 naira. And the reason why we're seeing this increase is because a lot of women across all age groups are becoming more beauty conscious, and they're also investing a lot on their personal grooming. This is because when you look good, you feel very, very confident. And as a result of this, you're seeing that demand is increasing. Another reason why we're seeing demand go up as well is because as time goes on, you get out of styling your natural hair, so you will want to explore different hair options. And hair attachment gives you that opportunity. You can make hairstyles like Ghana weaving, braids, and the likes. And you can also make your hair long, you can make your hair short. So there's that versatility for you to make your hair. And because of this, we're seeing that demand has gone up. Even social media has also made hair attachment awareness, it has made it go up. So we're seeing that demand is rising, which is making price go up. Another reason on the supply side, Nigeria is import dependent on hair. Most of the hair attachments that come into Nigeria are imported. So we're seeing that it's directly linked to exchange rates. So due to the exchange rate fluctuations, we're seeing that prices are also going up. So both because of exchange rate fluctuation and rising demand, these are the factors that are contributing to the increase in prices of hair attachments.
Right, and you know, looking around the market, it seems almost everyone is selling hair at this point, as talking about human hair, you know, and all of that. But you know, yes, now Dirty December is coming on. I guess a lot of women want to make their hair this December. I guess, are we going to expect more price rises this season?
Yes, definitely. We're going to expect an increase in prices because Dirty December is that period where a lot of Nigerians look forward to. And because Dirty December has a lot of activities like concerts, festivities, and the likes of it. And as a woman and as a lady, you want to look good for this Dirty December. So people put out a lot of resources to make their hair. And also the hair suppliers know that this is the period where we have a lot of Nigerians in the diaspora coming to the country. So they also want to take advantage of this to increase the prices so that they can make more profits. So definitely Dirty December is going to increase the price of hair attachments.
All right, let's see how dirty it's going to get. Thank you so much, Emefiele, an analyst with financial derivatives company. And yes, we're talking about hair. Thank you.
Thank you, Lad.
All right, now let's get a check on what's playing out with the markets that we track on the African continent. We see the NGX there. Yeah, just 1 basis point down, 145,000 last time we checked. That's for the all-share index. This start of the week on a back foot. And definitely, we don't know if this is going to replay what played out in the market. That's for last week, but we're definitely watching out at this point. We're still around all-time highs. Well, let's discuss what's driving sentiment in the market. And also, we got that news that our foreign reserves, that's hit $46.7 billion. Join us now to discuss. We have Abiodun Kerikwe, MD, AfriInvest Consulting. Great to have you on the show, sir. Good afternoon.
Good afternoon, Ladi. Thanks for having me here.
Fantastic. So we've hit another high for our foreign reserves. How bullish is this news for companies listed on the NGX?
Yes, indeed. National reserve is up in excess of 8%, or roughly just about 8%, which is very strong news. Particularly if you look at it in the context of where we're coming from as an economy. So really, this is quite positive and encouraging for the market and for companies generally. if you dimension it from three particular angles. First of all, the buildup in reserve drives what we call macroeconomic confidence. Two, it drives liquidity, and then it also shapes up risk perception about the Nigerian economy and the business environment generally. So if you look at it from a macro stability or macroeconomic stability or confidence perspective, the build-up in external reserve clearly influences exchange rates, which means stronger reserve would help the Nigerian economy defend the currency better. And a stable currency would mean reduced imported inflation and exchange rate risk. If you look at the headline inflation numbers, even that we just saw recently from the NBS, that number continued to track downward. Then looking at it from a lower country risk premium perspective, investors would then begin to look at the Nigerian economy as a much more resilient economy, which of course would lead or translate to increased foreign. Look at it from a foreign direct investment perspective or foreign portfolio investment. And more importantly, the policy space, it creates greater policy space, both from the fiscal side and from the monetary side. So the government, central bank can now better manage shocks, either from commodity price swings or capital flight. And then it then provides a more predictable business environment for businesses. So that build-up in reserve that we're seeing provides economic stability and investor confidence. Then from the company perspective, which are the listed companies, how does this translate into bullishness? I mean, using your word, for these companies and create a bullish outlook for the Nigerian market as a case where. So stronger reserves will then translate into stronger macro fundamentals, and of course, which has several benefits for firms. Looking at it from a lower input cost for import-dependent companies, so you have companies that are import-dependent. And if you look at the performance of companies in 2023, 2024, they suffer quite significantly from this. What we're seeing in 2025 is a massive recovery where companies are moving from a loss position to profit provision, even on an after-tax basis. So with the build-up in reserve, we expect to see exchange rate stability, more exchange rate stability, and that would translate into lower cost of imported raw materials for these businesses,
right,
and also lower FX losses on foreign denominated debt. More importantly is the impact it will have on interest rates, which although can be indirect, but it provides a bit more headroom for monetary policy authority to be more flexible around interest rates, although there are other variables to be put into consideration, which will translate into cheaper borrowing and better profitability for businesses. And lastly, if you think about it from the consumption or investor confidence part of it, there is that general improvement in confidence, which will drive consumption, drive capital expenditure, and then mix earnings.
All right, Abiodun. So, definitely you've mentioned, stability. Definitely we enjoyed stability for a while now, with the foreign exchange, our foreign exchange reserves also, rising. But, some of us still expect to see, strengthening, for the Naira. At what level would you say our foreign exchange reserves needs to get to take us to sub 1,000 Naira to the dollar? Are we talking $60 billion, $70 billion? Is that what we need to get to get a stronger Naira, sub 1,000?
Yeah, good question. So if you look at the external reserve trajectory for the Nigerian economy over the past 10 years, if memory serves me right, if you think about what's the highest level the external reserve has gotten to, and what's the corresponding Naira dollar rate at that level, that sort of can give a bit of a guidance. But a lot has changed between then and now, right? So if we see external reserve going north of not of, I put it roughly $60 billion level. That clearly gives the CBN a new level of firepower, right, to better defend the Nigerian currency, even though we are operating a much more transparent currency management regime in this dispensation. If you agree with me, that then gives the CBN more firepower to provide the needed stability, absorb as much shock that we might see either from commodity prices or from external, the external environment to better defend the naira. So rough estimates are suggesting that we could see the naira appreciate to levels around the 1,100 level to the 1,200 level if we see reserve build-up at a much more faster or aggressive pace. And this also have positive impact both for government, both for debt, how we are ranked in terms of debt servicing or debt indicators, debt ratios, how we're perceived along those metrics.
All right, definitely we'll keep tracking reserves at this point and see how much it swells and gets the naira stronger. Thank you so much. It was great having you for this conversation. Abiodun Kerikwe is the MD, AfriInvest Consulting. Thank you so much for joining us today.
Thank you, Ladi, for having me.
All right, now let's get a check on other markets that we track. Now we see for the EGX30, that's down at intraday 0.57%. The Nairobi Stock Exchange, that's looking good, 0.23%. That's for yesterday's close, 187 points there. Let's get a check now on the Middle Eastern region. We see it's mostly red there. The Dubai index, 0.92%. We're seeing major indexes pressure out there. Bitcoin is also under a lot of pressure. Abu Dhabi index 0.39% down, 9,872 points. Let's get a check now on the U.S. Stock futures. We see stock futures, there were little change today, but we're seeing big drops earlier there, 46,533 points, 0.28% down. That's for the Dow Jones Industrial Average. The S&P futures 0.28% down there. We've seen three major U.S. indexes. They closed in the red yesterday, and definitely we're seeing that also play out for the futures market, giving us direction on what's going to happen with the markets once they open up today, right there in the U.S. Let's get a check on Asia now. The same picture, big drops, big drops all through. The Nikkei 3.22% down to close, 48,702 points. The Kospi 3.32% down. So it's big drops led by tech stocks at this point. Then we see the Hang Seng Index, 1.72%. Let's get a check now on other markets we track there. Yeah, the Nifty 50 is not left out, but less drop there compared to the others, 0.40%, 25,910 points. Well, let's take it on to Europe now. Let's see if it's the same color we're getting in Europe. Lars Holter joins us now. Great to have you, Lars. So we're seeing China is quietly shifting its exports focus, redirecting goods from the U.S. to Europe, with Germany emerging as a key destination. But before we get into that, what are the markets saying in Europe? Is it the same color we're seeing in other indexes?
Yes, Ladi, it certainly is. Markets are down here, and they're down actually everywhere, whether you're looking at the FTSE in London, whether it's the CAC 40 over in Paris, Spain is down, and then Frankfurt, all down almost about the same, too, 1.3, 1.4%. And yeah, the fact that especially the U.S. is down, Asia too, Bitcoin, as you pointed out as well, Ladi, that has many investors worried, and analysts are saying that investors seem to be getting more risk adverse. It's not a real shock because we've seen a strong global rally, if not really in Europe, and now people are getting nervous. So I guess it's going to be really interesting how the next 1 or 2 days, especially with NVIDIA's numbers coming out tomorrow, how that's all shaping up.
Right. So much fear in the markets right now. But we see Germany and the EU have been in the middle of a global trade war for half a year now. And we're seeing studies, a new study is shedding more light on that. What can you tell us about this?
Well, Lani, I can tell you that mostly China has been rerouting much of its exporting business away from the United States ever since US President Trump, of course, has put these tariffs up to 145% on those Chinese imports. And where are they sending everything? Of course, to Europe and to Germany. Now, we've been expecting this to happen, and this new study is merely confirming what everyone had already known. And yet there's some interesting numbers in that report that show a direct correlation between the U.S. instating these tariffs and Chinese goods being dumped here. A massive uptick of imports from China was first seen here in the second quarter of this year, and that is precisely when Trump put out these tariffs. And this massive uptick is mostly felt in the car and truck sector, including, of course, car and truck parts. It's up and down, really, the whole value chain. Let's have a look at plug-in hybrids, for example. Chinese exports to the U.S. are down 99%, so almost non-existent at this point, while Chinese plug-in exports to Germany are up 80%.
Is China gaining that much ground in Germany? Is that only due to U.S. tariffs?
No, Ladi, not entirely. There are a few more reasons out there too. China has been working hard on making headway into the German and also the European markets. They've been at it for quite a while, so much so that the EU has also put a 45% tariff on Chinese electric vehicle imports. But China, you know, they've reacted quickly at the time and have almost entirely stopped the export of purely electric cars. They switched instead to those plug-in hybrids, as I mentioned, one of the main sectors where we have seen these major shifts, and they're sending almost exclusively these kinds of vehicles over here, and those are exempt from the tariffs. However, China is also sending trucks and truck parts, and all of that, mind you, is of high quality, and that is one of the main reasons outside the tariffs that are behind these market moves. The Chinese are producing quality goods, and they're doing it at low prices, and that is, of course, partially due to government subsidies, but also due to a weak yuan compared to the euro.
Yeah, definitely much cheaper to produce in China at this point. I just wish, why can't other governments just make it easier for businesses to produce, you know, at this point? But thank you so much, Lars Holt. It was always great having you. Thank you.
Thank you, Ladi.
All right, let's get a check on what's playing out with other markets now. And definitely we know Bitcoin is under a lot of pressure right now after losing that $90,000 level, tried to maintain it. But let's look at how stocks related to crypto-related stocks are doing on U.S. exchanges. That's for yesterday's close. So we see that pressure still on them. So as long as you're a stock that's related to cryptocurrency, Bitcoin, and any of that, whatever happens to Bitcoin happens to those stocks too. And we see MicroStrategy there. Closing yesterday, $195.42, down a big 2.17%. But the biggest drop we have was from Marathon Digital, $11.51. 4% down. We see Riot Platforms, $13.88, 0.50%. So all of them, most of them are down, were down yesterday. And we took the top five. We see Clean Spark, $10.61, 3.19% down. So definitely the rout is continuing, and definitely major altcoins are also suffering at this point. And there you have it. The Fear Greed Index, it's a very fearful market. It's not greedy at all at this point. The market is very fearful. Let's look at, some of the top headlines now. We're seeing Bitcoin traded funds have experienced a dramatic reversal of fortune. That's according to collective net outflow, approximately $2.6 billion over the past 5 weeks, marking the steepest withdrawal since the product's early days. According to market data, that a significant institutional retreat comes amid a sharp downturn in the price of Bitcoin, which is falling more than 30% from its recent all-time highs in early October, sinking to a 6-month low, below that $90,000 mark. So I guess it's official. It's a bear market at this point for Bitcoin. Then we see BlackRock. They sidestepped the Solana ETF showdown. A lot of ETFs still expected at this point. But as the race for the next major crypto exchange traded fund intensified, we're seeing the market leader there, BlackRock. They appear to be sitting out the burgeoning Solana ETF competition, choosing instead to focus its digital asset strategy on established blue chip cryptocurrencies. the world's largest asset manager, which fills the biggest spot Bitcoin and Ethereum ETFs by assets, has publicly stated it has no immediate plans to file for a spot Solana ETF, leaving the field open for competitors. Now we see Singapore Exchange, they've introduced the iEdge linked Bitcoin there. It's like a perpetual futures as it deepens its reach into digital asset markets. The exchange wants to meet rising demand from funds and professional traders by offering contracts with continuous pricing, central clearing, and margin standards that resemble, established futures markets, while shifting some crypto risk away from offshore platforms and into a listed Singapore venue. This launch comes as professional investors seek clearer, safer structures for cryptocurrency exposure. So if you don't want to hold the assets, by yourself, then definitely get that ETF. But yeah, the markets, a lot of asset classes right now struggling. Even the safe haven gold not doing any better today. But we'll see if there's a change for the midweek trade tomorrow. Well, that's it on Business Incorporated today. And definitely, you need to stay safe out in those markets. I'm Ladi Williams. Bye for now.